Okay, so in this video, I will briefly talk about the sales and the cash receipt cycle, which is chapter 3 in your SUA reference book. Note that this cycle often is called revenue cycle as well. So the revenue cycle is a very common business process for a lot of business, and it starts with the receipt of a customer order and ends with the cash collection from the customer. It has 5 sub-cycles. So the 5 sub-cycles, I will talk about sales and cash received sub-cycles in great detail later. So here, I will skip the actions regarding to each of these 2 sub-cycles. I will focus on the common transactions and accounts effects in these sub-cycles. So for sales sub-cycle is when you process the sales. So the common transactions that involve this cycle is cash sales and the credit sales. So for the 2 type of transactions, we're going to record these transactions in 2 different special journal. For cash sales, we're going to record it to cash receipt journal. For credit sales, we're going to record it to sales journal. Both are special journals. So oftentimes, sales journals are called credit sales journal. Okay, SJ. So next time when I say like CR, SJ, you should know that CR means cash receipt journal. Okay, so for credit sale, we also record things to accounts receivable subsidiary journal that we will talk about later. So now let's look at the journal entries and the accounts affected. For cash sales, the journal entry would be debit cash because we're getting cash, and credit sales. Whenever you make a sale, you're going to credit to sales, okay? And for credit sale, instead of debiting to cash, we're going to debit to accounts receivable. You have known this. However, for our purpose, for our class, when you write down debit accounts receivable, you have to note whose accounts receivable you are debiting to. So basically, you need to have a customer name to this accounts receivable because you need to record this debit to the AR sub-ledger. Okay? So for cash received sub-cycle, the common transactions involve all transactions that involve collecting cash or receiving cash. So it doesn't have to be transactions that directly generate revenue. So the common transactions I listed here are collections on accounts receivable. So then the journal involved, you need to record that in the CR, cash receipt journal, and accounts receivable subledger. It could also be a transaction where the company issue loans, and you record this transaction in CR as well, but you record it to general ledger instead of post to a subledger. So, but the debits and credits would be debit cash and the credit notes payable. Okay, so this journal entry will be recorded in cash receipt journal. Initially. So notice that in this cash receipt subcycle, we always record it to cash receipt journal because you are receiving cash. So the other common type of transaction would be cash sales and the sale of fixed assets, which we are not going to see in the SUA project. The journal entries, we already talked about the receiving loan proceedings. So when you collect the cash on accounts receivable, you debit cash and the credit accounts receivable, and note that you will credit to that specific customer's accounts receivable. So another common journal entry you might need is when company offer cash discount that we talk about it. So the cash discount is a discount that the company offered to encourage sooner cash payment. So when the customer kind of like made payment within a certain cutoff days, then the company offer cash discount. Then they record this cash discount to be using this journal. Debit cash, debit sales discount, and credit accounts receivable for that customer. Okay, so that's a common journal entries that you will use for SUA. So the next subcycle is sales returns and allowance. So in this subcycles, basically the company receives sales return request from the customer and then start to process it. So process sales return request. Oops, sorry. Process the sales return request, and then in here when they process it, involve approve this return request, and then waiting for receiving the goods. After receive the goods, credits customers. Okay, and also involve record this transaction in journals and subledger. So these two parts are common for all the cycles, so subcycles as well, but it's just in different journals and different ledgers. So the common transactions for this cycle is sales returns and sales allowance. For SUA, we're gonna have sales returns. And when you have the sales return transactions, you record it in SJ, which is the sales journal, and also record it in accounts receivable subsidiary ledger. The journal entry would be sales return, debit sales returns, and credit to that specific customer's accounts receivable subledger. So the next subcycle is estimation of bad debt expense. The estimation of bad debt expense is often done at the end of the year, and the managers determine how much bad debt expense they estimate for that year, and then record it in the general journal. We do not record it in special journal, sales journal. We record this bad debt expense in general journal and post it in general ledger. Okay, I wrote it here as well. So the entry is debit bad debt expense, credit allowance for doubtful account, which oftentimes we call it ADA. So notice that bad debt expense is an income statement account. Okay, this is an income statement. And then ADA is a balance sheet account. So this is also one of the year-end adjustment that you're going to work on. So please pay attention to that. And another subcycle is write-off of uncollectibles. So this happens when you determine that someone will never pay you. Okay, likely will never pay you. You identify uncollectible accounts receivable, and then record it in general journal. We do not record it in special journal, but we post it to both general ledger and accounts receivable subledger for that customer as well. So like we listed here. So the entries would be debit ADA, allowance for doubtful account, and credit accounts receivable. We know that we're going to credit out from that particular customer. However, I didn't put AR customer's name here because this entry will be directly recorded in general journal versus the previous entries are all recorded in special journal. Okay, so now here we only have accounts receivable for general ledger accounts receivable. We do not have a specific accounts receivable account on general journal. So however, you also need to post this to that customer's accounts receivable subledger to make sure we credit that out as well. Okay, so now let's take a close look at sales cycles because you're going to use this a lot in your homework. So the first step is like what I highlighted here. It's receiving goods orders from customer. Okay, on the left. Receiving goods from the receiving orders from the customer here. And then the document, the first row here is listed the actions in this subcycle, and the second row listed the document related to each actions. So the relevant document for this step is customer purchase order. Okay, so it's here. You receive customer's purchase order, and the document would be customer purchase order, and then the claimer approves credit and initials approval on customer's purchase order. So you have to act as a claimer, and then you use his initial on the customer's purchase order. That means you have approved this purchase order. Why do you have to approve this purchase order? What are you looking at? One key thing here is to look at this customer's credit. Okay, you have to look at the customer's accounts receivable subsidiaries and look at their credit limit. Let me write here. It's hard to write. I will write it later. And proves, okay, this customer do not have like huge outstanding balance in accounts receivable, so they can kind of still continue purchase stuff from us. So that's what the proof means. Okay, so once it's proved, then the company will go to the inventory and pick up item from the inventory and fill the order. So you could probably sometimes you do not have enough item for the entire order. You can have partial shipment, and you may have out of stock items. You need to note that. Okay, so and then after here, pick up stuff and you prepare the pre-numbered bill of lading. Bill of lading is some sort of shipment document. So which means that we need the bill of lading, the shipment document, because we need to ship the goods. So the bill of lading is a document prepared at the time of shipment. Okay, and usually in this document it will indicate the description of the goods that you shipped, how many quantities, and also some other relevant data. So this is a written contract of the receipt and the shipment of the goods between the seller and the carrier. So this is a contract between the seller and the carrier, not the contract between the seller and customer. The contract between the seller and the customer is the customer purchase order. Okay, so that's a document you need to prepare when you have this sales transactions. And notice here, we need to connect to number 1 on the same page. So going to here, this is connected from here. So the next step is to prepare after the goods is shipped. So oftentimes actually, the sales invoice is prepared in together with the goods and shipped to the customer. Okay, so you prepare the pre-numbered sales invoice. The pre-numbered document are one way of internal controls that we're going to talk about later. So when you do that, we need to look at a price list in your packet. There's a price list and see what goods the customer requests to buy, and then use that price list to come up with a sales invoice. So Adam then reviews the invoice and the supporting document and make sure it's accurate, and then he initials on the invoice. So altogether, this bill of lading, customer purchase order, and sales invoice goes to the shipping department to ship the customer order. Okay, and in this shipment, you will have this document: customer purchase order goes to customer with the merchandise, and it could be packing slip as well. And then sales invoice, we're going to have 4 copies of the sales invoice. One goes to the customer, and one goes to the storage, and one is mailed to the customer in case, so they can verify. And another sales invoice goes to page number 19 to B, which is the next cycle. So for here is, the whole cycle here looks like it happens in one day, but oftentimes it happens in multiple days. For SUA, it does happen in one day. Okay, so I went over the whole thing in one slide. So let me just briefly go here. Is that the second step is to ship the goods, that involves this part and this part. So the action is to ship the goods, and document you need is bill of lading that I already explained. So this part here, I also talk about it, is a bill your customer, and that document you need would be sales invoice and the price list. I have already talked about it there. So, and then the next step is something that I haven't talked about it. You can see here it says to be page 19, because this page you cannot see is page 18. Okay, this picture is the page 18 of your instruction and flu chart book, and that goes to page 19, which is this page here. This page is still the sales cycle, but it's accounting part. Okay, so which is this step: record in sales journals and subledger, and the document involved here is a sales journal and accounts receivable subsidiary ledger. I listed here. I put the next 2 steps together because it's kind of like together. So let's see what's in here. So once you shipped out the goods, then you can record this transaction. Before you're shipping out, you cannot do it. So this part is done at time of shipment. So the accounting part, first you need to determine whether it's a cash sale or credit sale. So if it's a credit sale, we wanted to make entries in sales journal and accounts receivable subledger. Okay, so see the dotted line here is the information flows to sales journal when the accountants make the record, record the transactions, and also post it to accounts receivable subsidiary journal. Okay, so here actually do not involve general journal here. So sometimes, so in this step, when we do the recorded in the transaction, it does not involve general journal. The general journal is involved in the bad debt expense write-off cycle here. You see the dotted line here. So this line is only goes to this information. The sales transaction information only goes to sales journal and accounts receivable subledger. And then the next step is to put all these files into a offline storage. Okay, so for our purpose, we skipped this part, this last step. So that's the entire cycle of the sales subcycle.